Hello, and welcome to another edition of Uconomy. I'm Thomas Fox.
And I'm Nunzio Bruno.
And, Uconomy, we bring you different subjects every week, and this week's is kind of timely. It's a brand new. I know.
I'm giddy with excitement.
Our off-camera conversations will not be bleeding into our our episode today. However, we're going to talk a little bit about the Jobs Act, and the Jobs Act sounds something like, oh wow, it's going to create jobs in America, and it very well may. But the Jobs Act itself is called the Jumpstart Our Business Startups Act. So it's not necessarily an act to create jobs. It's
jobs as in the employment opportunity is a byproduct, I'd say, of it.
Yeah, it's basically the main because let's be honest, our country, and we've heard a lot throughout the years about job creators and things like this, but our country is basically lives and dies by the small business owner. Mm-hmm. And they need the ability to have access to funding, and over the last couple of years with the financial downturn, that's been an issue for a lot of businesses. Right. How do I come up with this money now? How do I do this funding? And the Jobs Act gives them new opportunities, makes things a little less onerous, I guess would be the right word, when you're going through your filings, if you have to do SEC filings and things like that.
Well, no, because this is still going, especially the way the Jobs Act, before we even jump into it, I mean, you'd have to file with, if it's less
of a burden, I guess, is a sense. They've made some change. We're gonna cover we're going to cover most of this stuff. But essentially, the Jobs Act itself, and this is a quote from President Obama, because of this bill, startups and small businesses will now have access to big, new pool of potential investors, namely the American people. For the first time, ordinary Americans will be able to go online and invest in entrepreneurs that they believe in. And it sounds really, it sounds really good.
I mean, I was tingling and jingling when I read that.
And I know you like this. We work with a lot of small business owners and entrepreneurs, so it's something that's definite for them. But what does this mean to you? What does this mean to the average person? I mean, are you at home right now? Are you thinking about starting up a small business? Do you have an idea that you think could be the next Instagram or whatever and net you $1 billion?
Well, first you have to go back. I think before we even start to jump into Jobs Act, you have to define crowdfunding.
Well, indeed, and that's part of the major part about that. And when we talk about that, Americans are going to be able to go online and invest in entrepreneurs they believe in. That's more along the lines of crowdfunding, What'd you take it for the groups?
Wow.
For the folks at home.
Crowdfunding is a means for businesses to raise money so that they can operate. And previously, there were sites like Kickstarter.com and Indiegogo would allow you to put your idea out on the web and create kind of like a rewards program so that every donation that you were soliciting basically was being rewarded with either an in-kind product or service. So, and they would have different tier levels, right? So if I had a project and I was looking for community support, I would I'd set up a Kickstarter fund or an Indiegogo, and I'd say, okay, for every $5 somebody donates, maybe their name ends up on my website. For every $10, maybe I send them a T-shirt with the company logo on it, until you reached your funding goal, which was then released by the websites.
And the reason that they were giving swag, I guess, away was
basically
that you couldn't essentially invest
right.
and get that private endowment out of the company. However, that's changed a little bit with the Jobs Act. Yep. And what's interesting there is, again, this is going to be subject to rulemaking by the U.S. Securities and Exchange Commission, but startups and small businesses are going to be allowed to raise up to $1 million annually from many small dollar investors through web-based platforms. And that's the interesting thing about it. Now it opens up the floodgates. If you and I want to invest $10 in, again, we'll go to Instagram because if you're reading this, you probably already know if you follow this kind of stuff. Instagram just sold for $1 billion, and those guys, they started up a platform that took pictures and put some filters on it, and next thing you know, they weren't generating any money, but they sold for $1 billion.
Hey, they have infrastructure that's working. I mean, it takes servers to host all that stuff.
Yes. But that's one aspect of it, the small business, the crowdfunding. They have the things I find interesting too is the mini public offerings. I think would be interesting for people as well.
Yeah, and this is the really exciting stuff. Again, you have the opportunity to invest in ideas essentially before and have an ownership stake before where you couldn't, right? So instead of just getting your name up on a website, now I might own 1/4% of something for my $5 donation or crowdfunded investment. And it gives businesses the opportunity to kind of either start from nothing, an idea. A lot of great ideas don't have the capital to get them going, or even arrange a mini bailout for themselves.
No, indeed. I mean, with this, the mini public offering aspect, I think is interesting because they had a threshold. It's called Regulation A, which was an exemption from certain SEC requirements for small businesses seeking to raise less than $5 million. But now that's going to raise that threshold to $50 million, streamline the process for smaller, innovative companies to raise capital consistent with investor projections. Again, it's a little bit of it's a change, but it meant to make it easier on the entrepreneur. I mean, and let's be honest, when the small business grows, your community grows as well. And then the industry itself. We've seen social media. You basically swing a dead cat without hitting a social media advisor nowadays. I mean, now you got social media advisors, experts, but there's a whole bumper, bumper crop of industries that come up around these things. So if you have an entrepreneur that has a really good idea, but the current regulations are kind of stifling their abilities, these particular measures are going to be very helpful. I think the other one is going to be helpful too. Is this IPO? I think what they're dubbing the IPO On-Ramp. And IPO stands for Initial Public Offering. You want to talk about a little bit?
Well, before we even go into the IPO on-ramp, I just wanted to make one quick point that this crowdfunding has existed even before websites like Kickstarter and Indiegogo. There are a large influence from what they call microloans or from community type investing. It was very prevalent in smaller communities. So it would be if you had an idea for a business and you had some of the capital lined up, you could go possibly to your local church and say, hey, look, this is my business plan. I'm looking for some seed capital. And they would have arranged these microloans, these $2,000, $3,000, $4,000, $5,000 notes that they would write on for your business. So it's kind of just to take it out of a frame of reference. It's coming from the already existing physical space to online, where now your reach is even farther.
Yeah, but they've had microloans and crowdsourcing for different things throughout time as well. I mean, India was one of the first ones to start the quote unquote microloan process, where business owners could borrow anything from
like $25.
Yeah, $25 to $100 or whatever it may be.
Kiva.org, I think, does that.
I believe, yeah. Yep. So yeah, it's a little bit of a variation from that with the crowdfunding.
But back to the IPO on-ramp.
IPO on-ramp is kind of interesting as well.
Makes it easier for young, high-growth firms to go public by providing an incubator period for a new class of emerging growth companies. So during that period, the qualifying companies will have time to reach compliance standards that would kind of run along with current IPO standards, because you are offering equity or stocks essentially. So you have to make sure that you're complying with all of the SEC regulations. You'd have to comply with Sarbanes-Oxley auditing requirements, so you'd have to have some kind of accounting standards now that keep track of these investments and the capital spending, because you are essentially a public company at that point. And you're on the hook. You have stakeholders that you're responsible to take care of. And it also extends the period to a maximum of 5 years or less if during an on-ramp period a company achieves the $1 billion in gross revenue, $700 million in public float, or issues more than $1 billion in non-convertible debt in the previous 3 years. So meaning that you're taking on excess capital in the form of debt, essentially. Your non-convertible debt is bonds.
Oh, indeed.
And,
but this is an interesting point, though, because of this measuring that, especially, for a small company that may or may not have had an accounting presence, let's say. If you're going to go this route, you're going to need an accountant at this point in time.
Oh, yeah, absolutely.
So you're going to need. So it's going to, in order to make money, you got to spend money. And when it comes to something like this, your internal structure for a company or a new offering or something like that is going to be a little bit different if you're trying to go after these funds.
Yep.
But it's the price of what where you want to go. And now, especially with social media and things like that, and your contacts that you have nowadays, and you make an easier argument nowadays for someone to, hey, listen, donate $5 to this, or you just say donate. But I mean, if you look at some of the campaigns that we had, the tsunami campaign and things like that, hurricane campaigns, there were tremendous amounts of giving of small dollar amounts, $5, $10, whatever it may be. And now you take that model and you say, hey, let's fund growth industries. It's very appealing to people, and I think it's going to be interesting to see how it all kind of plays out.
Better point, even to add to that, is some of those donations that went to those relief efforts were through people were donating to organizations that might have been brand new. and it hadn't existed before that. So people just came up with ideas that they wanted to help these victims, and they said, hey, you know what? I'm going to start my own giving organization. So give to me, and then I'll vicariously give.
Yeah, I mean, even when we get down to people like places like the United Way and things like that, they've millions of dollars, if not, I think close to $1 billion on some of the, especially the tsunami fund, and it was quick turnaround. As soon as it happened on Twitter and people started talking about it on Twitter, they had the text campaign up and things like that. So it's really easy to mobilize nowadays, and I think that's what the Jobs Act is really trying to capture and to play off that. With the world of social media, you have a far greater reach. And if you are that entrepreneur who's struggling with a good idea and you just can't seem to find the funding, this is going to give you a good platform to get there. Now, that being said, there are pros and cons, and there's a couple of things you have to do to get set up. If you're really looking about going after these kind of funding that's going to be available through the Jobs Act. Let's start with the pros, because it's always a good place to start.
Yep.
More money for startups. That's important. That's important for everybody. In the past, even I would, when I would go out and I would talk to people and networking, people would come up with an idea and they'd be like, wow, that's awesome. Can I invest in your company? Back in the day, you'd have to say, no, you can't. Now, it changes to a maybe. Now it's like, maybe you can. Let's, if you're going after the crowdsourced fundings and things like that, and as long as you have your internal structure in place, you turn that no into a maybe, and then that maybe into a yes, and you never know where that's going to go for you.
No, QuickBooks just needs to come up with a Sarbanes-Oxley edition. Right.
Well, we could have a whole separate, just Google Sarbanes-Oxley right now, because we're not going to get into that. That's crazy.
Another benefit is it kind of levels the playing field. It gives more control over your startup, right? So along with the investment opportunity comes the opportunity for the creator or the entrepreneur to actually retain control. So instead of taking on a multitude of partners and diluting the decision-making process, you're essentially staying in control with the addition of stockholders.
Yeah, I mean, if you have the opportunity to take on a silent investor, that's fantastic. But sometimes you get people that want to have that stakeholder imprint. They want to be able to involve in the decision-making process. And if this is, they've got the money, you got the idea, that can kind of pigeonhole some folks, especially the creative mind versus the analytic mind works very differently.
Right.
So that's another benefit on that place as well. But they could also, what I like about it too is we're in a large marketing society. When we look at things like Facebook and things like that, and we were talking about it earlier. These sites exist in a sense, yes, so we can share information, but ultimately so we can get marketed to. And that's a big thing. So using this right now and going towards this kind of structure gives you more control of your branding message in a sense as well. So that's a very good aspect there. I think the last one, one of the other things I like as well is the startup economy becomes transparent. And that's one of the biggest issues that a lot of people are going to have to work out. Plus, there's less onerous Sarbanes-Oxley paperwork.
And it's providing jobs, right? Bottom line.
And theoretically, it's going to go to providing jobs. However,
now to the cons.
There are some cons, and we all know that when there's money on the table, there's fraud. So the spammers are going to come out of the woodwork.
Spammers are going to be huge.
We're going to have a large issue with that. Disproportionate risk versus return, and when I say that, the greater the risk, the greater the return. Let's be honest, many businesses fail. And I mean, GooglePets.com.
No, yeah, I mean that's an absolute certainty, right? I mean, businesses, not every business is going to operate, 100% of the time. But the idea there is, if you are somebody who is willing to be a part of the crowdfunding, that part of society to start with, now, having some kind of ownership stake kind of sweetens the deal a little bit.
No, indeed. You're also going to, you have more exposure as an SEO of the organization. So you got to, be on board with that. Well, we're running out of time, so we're just going to get ready for the Jobs Act. A couple of things that we recommend. Get your business plan together. Get all your documents in place, your incorporation documents, financial forecasts, and everything.
Yep.
Full executive team bio as well. Do your market research. Get all your contacts together. Wonder if these people might be those people you could hit for initial investments.
Instead of just spamming Facebook.
Yeah. Right. Make a video. What are you trying to do? Video, people are very visual. If you can portray something in video, you could resonate with folks. And then craft your pitch. Get your elevator pitch going.
Yep.
In 30 to 60 seconds, how do you explain your startup and why people should invest in you?
Because again, this is media's online, so you got to be able to capture them within that 30 to 60 second mark before they move on to the next page.
Indeed. And speaking of online, make sure you follow us on Twitter. It's at Uconomy Show. And also you can find us on Facebook. And I always forget the page. It's just Google, just Uconomy.
Yeah, it is Uconomy. It's Uconomy Show.
It's Uconomy Show.
Uconomy Show.
If you look up Uconomy, you'll find us. So, well, thank you very much for tuning into this edition. If you want to learn more about the Jobs Act, please go to Google Jobs Act, and take a look at it. You never know how it might help you out.
Yeah, thanks.